Happy St. Patrick's Day, everybody. Look at this. Who owns CNI? Who owns Canadian National? Let us know in the comments below or to the side, wherever it might be for you. But look at that. Do you know where I got this from? Ladies and gentlemen, boys and girls, I got this from the Chicago St. Patrick's Day Parade. So if you own CNI, hey, hopefully this didn't put too much of a dent in your the income statement, the selling general and administration. So ahoy, Alan. I don't know where I can put this, but let's see how this goes. Is that gonna block my face? Well, I don't know. Maybe we'll do that for a minute until I get too annoyed with it and I can't see what's going on. Like, hey, where you guys at? But yeah, what's up? Thanks for coming on back. It's so good to see you. Let's talk some dividend. We'll talk some dividend stocks and when raises, whatever you got. Have I ever had a 10-bagger gain? I'm sure I have, Matt. What is that? I can't think right now. How many percent up is that again? I have ExxonMobil without dividends reinvested is up like 140% or something like that. And yeah, I don't remember what a 10-bagger is, but oh, look at this. Defense Dad. What's up, man? Nice to see you on the this is bothering me. I keep feeling like something's covering me here, so there you go. Yay, Canadian National. It's a giant party favor is what that is. And all right, we're settled in. It was literally, you guys, you have no idea. I don't know if you ever deal with this, but I was, oh, who owns CarMax? I knew that once. I did go to the St. Patty's Day Parade, and somehow, even though it was cloudy, it was windy, it was beautiful, I got too much sun. And does this ever happen to you when you get too much sun? Bing. That's my party favor from the St. Patrick's Day Parade. It's a big old cold sore coming. Isn't those the craziest? I woke up this morning and I was like, something feels different. I was like, no, cold sore ahoy. Stick the flag in the plant. Can that, oh yeah, that one's on. I can't. So it's not a real plant. That's why it won't work, Steve. That's a fake plant. That's fakey fake. And we got that from TJ Maxx. Ticker. TJX. TJ Stores? No, what is the name of it? That's one of the stock. What's on your guys' watch list as this market drops? I saw Ross Stores dropped a bit. Ticker RST. Jim, thank you. I appreciate that because sometimes I forget. I don't remember. 1,000 to 10,000 to 10-bagger. Yeah, I don't think I've had that much. But all right, let's see real quick who else. Shannon, I love it, man. You're always bright and early and bushy-tailed. You don't sneak in the back door. But yeah, Pat, and for those of you that don't know, I shared five thoughts about the stock market crash, if you want to call it that. Correction, actually, right? We're in correction territory, or we were before Friday's bounce. And it just goes to show I've given up trying to time the market. I'm just going to DCA. I don't know. As I was looking through my notes, very interesting. Warren Buffett had said how, echoing Ben Graham, that the market is there to serve us, not instruct us. So if the market's crashing and you panic sell, the market is instructing you to sell. But when you're looking at businesses and buying businesses that happen to be part of the stock market, well, then you are the market is serving you. And Warren said, if you're looking at a chart, making decisions, then you are being instructed by the market when to buy and sell your companies. So I completely missed that, but it was in my notes. So really cool thought there that if you are looking at a chart, then you're trading, and traders are instructed by the market. The market is not serving you. So we want to have that long-term mindset and think about buying businesses. So I shared 5 quotes that I think are apropos. And honestly, it's kind of a little bit self-indulgent because I share those to help me out too as much as you. And Echoing Morgan Housel, he said he writes about things that he finds interesting because in that way, people pick up on when you're writing for yourself. It's interesting. It doesn't feel like work. But when you're writing for someone else, it could feel forced. It can feel like work, and it may not be your best stuff. So I really like that. Morgan just writes about things he finds interesting and assumes then that somebody else will hopefully find that interesting too. And hey, he's got one of the best selling books of all time. So how about that? But uh, with that being said, thank you, Pat. And I was going to touch on what you said because I mentioned how the people that should be worried about a market crash, right, are those on fixed income, retirees, and traders. And Pat pushed back a little bit, but my thought was if you are receiving dividends, if you're living off dividends, if they are a part of your fixed income in retirement and the market goes haywire and a company has to cut or suspend its dividend, then that would be more detrimental to a fixed income retiree than somebody who's 27 and is years off from needing that money to live on. So I guess that was my thought. But Pat, you brought up a great point that you underspend your dividend income so you can actually still reinvest. So it's kind of a cool thought, right? That's how you become wealthy. You have to underspend your income. And I'll get to the chat here in a second, but I read Demon Copperhead last week. Really cool book. Really kind of an effed up tale, I guess. Barbara Kingsolver wrote it, and it's fiction. Sometimes I like to, get my mind off of the investing stuff and do but anyway, there was a saying in there where the character's dad had told him that happiness is really 2 cents because if you spend a penny more than you make, you will be unhappy. But if you spend a penny less, then you're going to be okay. So it's kind of like, and obviously that's just oversimplifying. So, Pat, I do appreciate that pushback. And everybody, if I say something not right, pushback. But I do want to know, what have you been buying this week? Did you have any big purchases? Just to get the party started here. Oh, it did it. I'm getting rid of him. You see, it took my eyes off. I was looking today about this guy. I told my wife, I'm like, I got to get rid of this guy because I don't know. This whole background, it'll change. I got to do something different. The guitar's not centered. My daughter wants to be an interior designer. So I was like, help daddy out. Come on. Like, anyway, what was I saying? Oh, I'm going to get the party started, right? And yeah, I'll show you guys what I bought last week. I'll go first, I guess. So this is from the newsletter. And what I bought was, here, the dividends I received. $166.37 in dividends. Now let's do this. Get more real estate. I wish it was an automatic setting like that. So $166.37 in dividends. 43 from ExxonMobil, 59.50, almost $60 from Realty Income, 25.81 from Agree Realty, and 37.50 from Main Street Capital. And there you go. We've received $1,092 in dividends just in these 3 stocks we share. Remember, I have a 401k. We have kids 529s. I don't share any of that stuff. And then what I bought, there we go. Even bigger. It's too big. 1 share of VTI at 272.86. Yeah, I did it. I'm over 101 proof of Nike. We got our 101st share. 6 shares of Nike at 73.70 and 1 share with those. We reinvested the dividends into yet another full share of Realty Income at 55.95. And then, in case anybody's wondering, I was poking around CEObuys.com. If you don't know, this is when CEOs just buy a stock, right, on the open market with their own money. And the one that caught my eye was, I didn't even see that one. CMTG. Is that Chipotle? I don't think it'll tell me. See, they don't give the name of the company. I don't remember Chipotle. Is that? Anyway, but this one, where'd it go? There. There he is. For the first time, because this is the only one, for Best Buy. Look at that. Best Buy. Their CEO, Corey Berry, he bought 13,500 shares with his own money at $72.92. So remember, he's probably thinking it's going to go up from there. And he currently owns 382,000 shares. So that increased his position in his own company by 3.7%. So there you go. I thought that one was interesting because we've chatted about Best Buy before. So, all right, let's blow through these. I'm going to say hello, rapid fire style. Jim, Steve, Alan again. Hello, Andrew B. What is going on, shipmate? You're all my shipmates, right? On the good ship, I don't know, Dapper Dividends or something. Yeah, and you're from Wisconsin. What are you doing up there? You seen the dancing grannies? They were in the Chicago St. Patrick's Day parade. Oh, speaking of, my man, pulled this one out. See if you know that. Focus, please. Here. I'll get it right. Oh, forget. Lakefront Brewery, everybody. One more and then we go, huh? That's their tagline. Pretty clever. Get everybody spending their money on the booze. But yeah, that's up in Milwaukee. So the Dancing Grannies were from Milwaukee, and they were there. All right, we got Frank. What's up, man? I'll just do a preemptive salute to you all. So, Boaz, you bought Amazon. I think I jumbled your name with Amazon. So you bought Amazon. Beautiful. Yeah, they're probably going to be okay. I'm reading this book too. I know it's like show and tell, right? Investing. Come on now. I don't know who to block out. Anyway, it ain't going to work. It's like playing a game. Investing for Growth by Terry Smith from Funsmith. Trying to get this thing to focus. Now I forgot the really important and smart thing I was going to tell you, but he made a point, I'll paraphrase, about buying good companies. Buying good companies usually has good results. Amazon is a good company. It's probably going to have good results. That plain and simple. Alan, you're buying SCHD and SCHG. I looked at a few more SCHD, didn't get them. I was hoping to get it lower, but there you go. The market just popped. Frank, you're still watching MasterCard, still thinks a little too rich. Yeah, I'm excited to see Visa coming down. I'd really like it to be under 300. And I remember telling you guys that when I bought Visa, I started buying it in the 260s and 270s. I had a feeling that one day it would be over 300. I didn't know it would be that quick, but that's a little game I play. When I'm buying Nike, I have a pretty good feeling that one day it's going to be over $90. I don't know when, no idea to tell, but at some point in time, I do believe it will be over $90. So my thought is that I will be able to get paid every quarter dividends to hold Nike, unless I do something stupid like sell a covered call and the shares get called away. But yeah, good thing. Waste Management, Defense Dad. What's Defense Dad? Were you in the military? Let us know. Inquiring minds would like to know. Who read the Inquirer? My grandparents used to get the Inquirer. Do they still have the Inquirer? Oh, you had to look it up on Copilot, Jim. Yeah, because I forget. People like, it's a 10-bagger. What? So I'm glad you guys, Defense buying the heck out of SCHG. Yeah, at the top, it's very similar to S&P 500, VTI, very heavy weighted in the Mag 7. Okay. Well, Jim, you should have told us to buy those years and years ago. So, hey, if anybody could put in the chat, what are the next 10 baggers? We'd like to know. All right. Yeah, if you guys got any questions, you want to look up anything, we'll go in a little bit to the news from Simply Safe Dividends. Waste Management. My guy Harris Elliott, fond of saying trash is cash. So, Jim, you are also retired. That's true. Fixed income and not concerned as you don't have all your eggs in one basket. Yeah, it's funny. Barry Ritholtz, I shared on my... You also under investor dividend income. That's a really cool thought. Something I hadn't thought of till Pat brought it up. Barry Ritholtz who the guys at Compound and Friends, Josh Brown, they work for Barry, I believe. Or are they partners with Barry? Anyway, Barry Ritholtz was on Professor Galloway's podcast, the Professor G Pod. And one pretty cool thing he shared, and I never thought of it this way, was that he says when you are diversified, or diversification means that there will always be something in your portfolio not doing well, with the thought being that whatever it is, you got real estate not doing well, I don't know, your Mag 7, your tech heavy S&P 500 is doing well. Maybe you have gold, and maybe when gold is doing well, those aren't doing well. So it's always kind of that yin and yang where you're going to have something always not doing well, and then you know that you're properly diversified. Manuel, you bought, Vale. I remember hearing about them before. I think we've looked them up. Isn't there something funky with Vale? Or is it another one we're thinking of where the Brazilian government is like the biggest stakeholder? They own, I don't know, 70, 80, 90%, something like that. Doesn't mean it's bad, but I don't know how some of you watching feel with some foreign stocks, but it's kind of like the devil right? There's foreign government risk. I mean, there's always any government risk, right? But I'm not as familiar with the shenanigans, I'll say it, of the Brazilian government as I am with the United States government. Boy, and are there some shenanigans going on now? It's exciting, right? Maybe not for everybody, but Steve, I'm still looking for that. Who's going to Google Carmex? This is the tingly cold sore treatment. It's 3-in-1, this tiny little thing. Put it on your lips and they go numb. Yeah, General Mills came back down. Yeah, all those were hit hard. Brown Forman was one on my list. Brown Forman and Diageo with these tariffs. So that could reverse on a dime. If all of a sudden, I don't know, the tariffs are repealed and things go back to the way they were, and the American whiskey. So Brown Forman's CEO had said that Canada pulling and not selling their products is worse than a tariff. Like, that's obviously because now there's no chance. But so their stock got hit hard. But yeah, I was thinking about potentially looking at Brown Forman, but those are multiple headwinds, guys, right? That young people aren't, well, okay, maybe the young people I saw, it sure looks like they're still drinking, but they were drinking something called Borgs. Have you guys heard of Borgs? It's a gallon milk jug, plastic gallon milk jug that was full of, we were seeing like green, blue, red, different colors in it. Well, come to find out, I didn't ask any of them. I had to Wikipedia it. The kids these days, right? If you ever want to feel old, I think it's when you say the kids these days, they take, I think it's like a fifth of vodka, water, Pedialyte, some kind of electrolyte mix, some Kool-Aid, some kind of mixture, and it's supposed to help them keep hydrated while they get drunk, but not a good, I don't think it works like that. But anyway, you also bought some Dow Chemical. So I know a lot of food stocks were down as well, Steve. Yeah, you guys are doing your retirement talk. I love it because I'm going to be there someday too, and that's really interesting that you guys both underspend your I love it. I love it. That's the way you keep the party going for longer, right? Oh, and it would be more, Kevin, because we took out money. Well, we didn't have to, but we took out that money to buy our car, and it's nice. It's nice to have a nice car with no problems, and that's oh, you know what I just noticed? My Average Joe's shirt. I don't know who was on Ryan's live stream, but when he wears a hoodie, he ties this in a bow. I usually cut these off, so that's a kind of a funny thing. Alan, yeah, the main special dividend is coming up. You're right. We were going to talk about that. Nike earnings this Thursday, so I guess I'm kind of getting in a little early preemptively. I think they may have wanting to do a couple kitchen sink quarters where they just throw all the bad stuff and blame it on the old management, the old CEO. I'm going to get caught up with you guys here. Oh, look at this. Matt, you bought your 100th share of OBDC and 404th of SCHD. Very cool. CMG is Chipotle. What was the one we were just looking at? It was CMTG. Yeah. Well, we can't all be perfect, right? So thank you, Frank, for... Yeah, I didn't think that sounded right, but... All right. Jeff, yeah. Oh, so this, for those of you watching, this was a Halloween costume from a few years ago. And yeah, my sister-in-law made this. So I wear it. I'm not a super huge, I've seen the movie a few times. Funny. I like when he's throwing wrenches, but oh, you bought Old Dominion Freight Line. They are on the watch list, and yeah, I shared a picture of them. Jason, you opened a position in T row. Dude, the time just flies by here. Cheers, everybody. This is no worries. This is just vodka, right? I'm gonna be like the old Michael Anthony from Van Halen. God rest his soul. Both of the Van Halen brothers dead, but the bass player Michael Anthony. This is why you can't believe everything you see, even going back then. Showmanship, everybody. When he would chug during his bass solo a bottle of Jack Daniels, come to find out it was apple juice, or that's what I read or heard somewhere. So I remember thinking, like, my God, he's superhuman. It's like, no, he'd go to, you can't drink that. You can't drink a bottle of Jack Daniels in 5 minutes and be fine, and then play for another, whatever, like 45 minutes of a show. It just wouldn't work that way. So, Jim, you open up LHX GLW. What is that Corning? No, I can't think of GLW. Let me see. And then we will look at yeah, it is Corning. All right, cool. Very cool. So you bought that, Chevron and Johnson Controls. Oh, that's interesting. I gotcha. I always love playing defense, man. I always love playing defense. So, David, are you the one that brought up Comfort Systems last week? Because I never dug into it, but it does look good. So, ticker FIX. That's Comfort Systems. Oh, you know what? That's funny. My good friend's brother worked at Heinz VA, and I guess he's taken this Doge buyout or something because he's close to retirement age. So, all right, 1 share of RSG. Nice. All right, good. I'm almost caught up to you guys. So here we go. We're going to... Oh, Oxford Club. Yeah, that's Mark Lichtenfeld, right? Mark Lichtenfeld's jam, the Oxford Club. Net, CRSP, LTH. Some of those, you know what, Pat? I'm going to take a screenshot of this because I'll look at those later. But yeah, Marvell, MRVL, right? They've been dropping hard. All right. Yeah, I like to. So that was what I was going to say about the companies like Brown-Forman. They have the headwinds of tariffs, and just young people don't drink as much as they used to, like my generation did. Lockheed Martin, I hold 10 shares of them still. We also have exposure in SCHD. Yeah, I just got those 10 shares. I've just been holding on to them. May take a hit because Canada and a few of the other NATO nations are considering canceling their F-35s. Yeah, it's hard, right? Because I don't fully understand the tariffs, but this is what's happening. This is a reality of it. And, I think the strong businesses will be able to, they'll be able to survive it. Let's hope. All right. Going to be funny, mine and your wife's Roth for the last year, spending some money. Okay, cool. Fast Eddie. And by the way, nice to see you, man. Nice to see you. What are you going to be doing at the Chicago airport, Alan? Just passing through? You moving in? Look at that, everybody. Rad Dad Investor. What's up, man? All right, so we'll do news here in just a minute because I'm almost caught up. Yeah, and so my wife and I, we saw that, and she had called it jungle juice. She thought it was that, but I guess it's a little different because the kids are trying to be smarter about it and give themselves electrolytes and whatnot. But oh, hi, Dex. Thanks for coming by. You can dodge a wrench, you can dodge a ball. Yeah. Sam, good to see you, Sam. What's going on? Sam is joining us from the other side of the world, down under. Oh, you didn't? Well, that's pretty cool. Yeah, we did. We took a look at Comfort Systems, right? Is what it is, Fix. They were, yeah, they're look very, very solid. I didn't really see anything wrong with them. Okay, you're in for a layover. Cool. Hey, Bubble, thanks for commenting on the last video. Do you guys like videos like that? You know, sometimes I get, and Bubble, we were talking about that, where I get on the fence about doing the 3 cheap stocks to buy now. I'm guilty of it too. But there was just a lot of, what do you call it, cognitive dissonance going on in my brain because I think, well, I don't feel right if I were to say 5 super cheap stocks to buy right now. Like, you got to buy them. And it's like, by the way, I'm not buying these and I have no intention of buying them, but you should. So I feel better kind of saying these are cheap right now, or at least they look cheap. And you might want to put these on your radar. They might be right for you, you know, different strokes and all that. So, all right, let's do some, oh, good. Thanks. You know what? Thanks, man. It's, I guess, I don't know, not easier, but it's fun to pull up some stocks and say, here's the metrics I use to find them. And these sites, you know, the market can tell you the price of a stock, but it takes an analyst, professional, or your analysis to tell you if it's true value, if it's undervalued or not. And yeah, it's totally subjective. Like Warren would always say, you don't know the intrinsic value. You have to do your best guesswork. And at the end of the day, it's still a guess. So I don't know. How do you guys think about that? There's a thought I've had where I will say, I think 5 years, 10 years from now, this company is going to be more profitable, or at least they're going to be able to have pricing power, raise their prices, buy back shares, probably pay an increasing dividend. And if that's the case, then their stock price is naturally going to have to go up. So I think it's our human brain. It's our psychology. We want to remove the unknown because the unknown is uncomfortable. So we want certainty and we want to believe that they can give us the future stock price to 2 decimal points or 2 decimal places. You know, you can't, but all right. Good. Well, I'm glad you guys like that. And I'll do more of those. And then we can all sleep well at night when yours truly just says, hey, I'll let you know if I own one, but I don't think I said it on the last video, but it'd be like, yeah, I don't own any of these. They look cheap. This one looks interesting. This one, maybe not so much. So, but it's up to you to look into them. So, all right, let's do the news now. We've gone far enough. And for the 58 of you, holy cow, that's crazy. That's awesome. Let's do it. As soon as I can figure that out. I know I'm always like an old person stumbling through all this. That's what I want to do that. All right, here we go. We'll do the news you can use, I guess. All right, so starting where we left off, right? Remember that, we left off here. Walgreens was going to go private. When does that happen? Did that happen already? I don't know, but here we got Applied AMAT, right? Hike their dividend 15%. And yeah, you can zoom in on these. We're not going to read everything. If you want to read Simply Safe Dividends, which is where this is at, they are, I think you get what you pay for. And if you want to, you can try them out for 2 weeks for free. You just give them your email address. So go to simplysafedividends.com and you can try it out. But Applied Materials, another chip maker. Not the Dorito kind of chip that I can understand. Oracle, 25% dividend hike from Oracle. Really, really nice. Dividend safety score of 90, very safe. National Storage, ticker NSA, got a dividend downgrade. This one was popular a minute ago with I remember a lot in the community were talking about National Storage. So there you go, dividend downgrade because they shift their strategy while the economic headwinds pressure the dividend. Flowers Foods. Do you know who Flowers Foods owns? Let me watch this. I don't know. This may be just interesting to me, but Flowers Foods, founded in 1919, and it'll be here in the Outlook. They own. Dun, da, da, da. I know it's. Oh, it's not there. I thought they had a picture of it. But they own. I think it's Dave's Killer Bread. I thought they had a picture of their products. Yeah. They have Nature's Own, Dave's Killer Bread, and Wonder, and Tasty Cake. What's your favorite Tasty Cake treat? Put it in the comments. I don't know. But anyway, so there you go. Flowers Foods is the company that owns Wonder Bread and Dave's Killer Bread, which is some expensive bread. I mean, it's probably good for you. But they refreshed their outlook. That blue thing I showed you, that is written up by Simply Safe. It's not algorithmic. That is human beings. I think either Matt DeLeon or Brian Bollinger, they're the ones writing it up. So that's, they just go through it and refresh it. So there you go. Founded in 1919. Omega Healthcare. Hey, if you guys held through it, shout out because they got a dividend upgrade from 40 to 50, borderline safe. And yeah, they've spent the last few years battling pressures. So looks like their tenant, they were, I know some of you were still buying, so good for you. They looked like they're potentially overvalued, but they were having troubles with their tenants. And I think, I don't want to give you false numbers here, but let's see. The government reimbursement rate is 80%. I thought it said they were 84%. Yeah, their occupancy rates have risen from 74 to 81%. So they got some work to do still, does Omega Healthcare. But if you still hold them, you know, could be, clouds could be parting. A couple more here to go. Annaly Capital. I love it. Yeah, this is one of the ones we always bagged on for cutting their dividend. But they increased the dividend 7.7% following years of reduced payouts. And I'll just show you this one for the fun of it. But yeah, this is not really what you want in a dividend growth company when constantly cutting. But they did have big rises coming out of the GFC, and then it's just been constantly cut flat. So Crown Castle got a dividend upgrade. So because they're going to sell their fiber business and rebase the dividend, they are now 50 borderline safe. And two more at you. They reaffirmed the safety score of AbbVie at 80 safe. So they continue their diversification efforts. And last one, they refreshed their outlook on national fuel gas. So 95, very safe. So there you go. That is the news and a little blurb. They were featured in the Wall Street Journal. So, oh yeah, and this too. Realty Income raised their dividend yet again. So our dividend income increased a whopping $1.34. But hey, they raise it almost every quarter. So there you go. And I think that's all we were going to talk about there. So let's see what you guys have to say. Yeah, Matt, you want to look at ADP? We can look at that. All right, let me get caught up, though, in the comments. Ladies and gentlemen, don't try to put water down your windpipe into your lungs. I am a professional at this, so smart enough to hit that mute button. You like that? Pretty good. All right, all right, all right. So Sam would love to hear people's thoughts on Burke B. Thinking about opening a position. I think Warren is getting ready to retire. They passed, I think the board can't be 85. Anyone on the board can't be over 85. But I think there's a Buffett premium and there may be a Buffett discount when he leaves. When he finally steps down, I think it's going to be soon. It just seems like they're making a lot of moves, hoarding cash. He's probably trying to set up Greg Abel, who's going to be the CEO, I believe, to really take the reins and kind of put his spin on it. But Warren and Charlie have said for years that Berkshire should keep running without them because of the way they set it up. It's autonomous, meaning that they acquire businesses when businesses want to, essentially they want to get money and they will sell to Berkshire for a price, and then they will get to stay on and continue running their business in the way that they always have. It's just they send the profits to Omaha and then Warren and Charlie, but it also gives them access to, if they're ever in a pickle, they need a cash infusion for whatever have you. So it's a way of a company going private, or if they're already private, Berkshire can buy those businesses. So because they don't want to pick CEOs and tell them how to run their business when it was successful. So that's why Berkshire should keep operating pretty smoothly, because these businesses almost run themselves. Like Warren and Charlie said, they just allocate the capital. They don't get involved. So many are on the Nike bandwagon. Oh, are they? I did not know that. I started buying Nike when it was crashing, but I did not know. Oh well, I mean, maybe the bandwagon's gonna get crowded, so who knows? I'm not buying Costco yet. They are still at the top of my list, but I'm holding for under like 750 to 800. It's nice to see it in the 800s. So I'm really holding out for under 800, and I'm hoping it'll get there. So yeah, we will look at ADP. Jim, I love it, man. You always have the best comments. You own Brick B plus. The plus side, you don't have to pull a John McClane and crawl through the ductwork at CenturyLink Omaha to get into the Berkshire Hathaway annual meeting. Ah, CenturyLink. That's funny. Have you been to one of those, Jim? I thought about it, but it doesn't work out. I hear it's a madhouse there. It's just a madhouse. No way, Steve, you bought Flowers Foods, man. I'll cheers you to that. Sam, I think it's the way to think about Berkshire also, and you guys could tell me if I'm wrong. I think that Berkshire it really is almost like a mutual fund. It's a big conglomerate. They own many businesses, including their stocks. It's kind of funny. In one of the annual letters, Warren commented how he will never comment on what they're buying or selling before it's actually made public information, because he doesn't want to disrupt anything. So he said people would come to him and say, Warren, I heard a rumor that you're buying this. And he'd say, yeah, I can't tell you. He's like, if you want to be certain, just buy the stock. Just buy the Berkshire stock. That way, what does it matter? You'll be in on everything I'm buying and selling. So yeah, he's always been mum on that. But yeah, Sam, I think it's going to be okay. There was a rumor though that they're selling their real estate business to Cross. Oh, who is it? Cross something, not Cross Point. But then I heard there might be some quashing to that rumor. Steve, you have a small brokerage account. Started your investment journey a year ago at age 65. Wow, that is a really interesting. That is really interesting. Had you done none investing prior to that? Do you have like a pension? Do you have, if you can share? That's crazy. Uh, wow, CVS, Ultra, you're up on UGI, ONG Electric, right? Ohio Gas or Oklahoma Gas and Electric, something like that. Bristol Myers, Owen getting dividends. Nice. Dude, I applaud that. Fantastic. Uh, Good. I'm almost caught up again. MLPX and chill. Hey, Patel, I'm on the MLPX bandwagon, right? I want to make sure, though, you don't mean MPLX, right? You mean the Global X MLP and Energy Infrastructure ETF, yes? Ooh, good question, high tech. I don't buy gold, but I did. Peter Schiff. Good old Peter Schiff. I know you're not supposed, what they say? Criticized by category, praised by name. Well, uh, back in the day, coming out of the GFC, I want to say circa 2013, maybe. Yeah, 2014, something like that. I took out money from the 401k because Peter Schiff, I heard a couple interviews and like he said, market's going to be terrible. It's going to go away. Gold will be just, you got to buy it. So I bought 2 ounces of gold, sold 401k money, paid the penalty on it, sold it down in 2014. Stupid to buy gold. I ended up selling that gold for a small profit. I think I bought it around, I think it was like $1,700. And at one point it was down to 900. Gold went down. The stock market shot up. And then as I learn investing, like it's something people pile into when they're nervous, but it has no cash flowing properties. I mean, what are you going to do with gold? You have to be able to, I don't want to say the greater fool theory, but you have to find somebody willing to pay more for it than you paid for it. And I guess you could make the point with anything, but there's no cash flow component to gold. It's it's hard to put an intrinsic value on it. Like there's no, you can't look at the free cash flow yield of or the IRR of of owning an ounce of gold that's sitting in your drawer upstairs. Like we said, if you have an ounce of gold, it's not going to fart out gold dust that you can then melt, under like a crackhead, put the gold dust in a spoon and melt it down and get little ingots of gold. Yeah. So but it's hard. It hit 3,000 for the first time. I sold it right around almost 2K, 2,000. So sure, I wish I held it for another. That was April of 23. I sold it for like $1,973. And you guys may be like, wow, he has a really sharp memory. Not so much. This desk I sit at, my wife and I have been cleaning out some things. I found the receipt. So it was April 8th, 2023. I sold it for $1,973 an ounce, my 2 ounces. And then I put it in the brokerage account. I bought stocks with it. And yeah, I'm still okay with it. We don't know the future. We don't know what the future holds. And I wanted to have more cash flowing businesses as opposed to an ounce of gold 100 years from now will still be an ounce of gold. And I know there's a thing where in 19, I don't know if that's had to have changed now, where they said like 1928, an ounce of gold could buy you a full suit, hat, shoes, suit, coat, everything, the works. And then they say an ounce of gold now can still buy you that suit. So it's like it leapfrogs inflation. It maintains your value, but yeah, Warren's not a fan of it. So okay, what do we got next? Look at that. So that's a long way of saying I did buy gold because Peter Schiff told me to buy gold. And for a long time, it was a bad idea. But what are you going to do? Hey, Rob, what's going on, man? Everything is good. appreciate that. I appreciate you and all of you for being here. So Matt, holy cow, I got to look at your ADP for you. Automatic data processing. I do believe they process our stuff. So, oh boy. Boaz, all right, we'll answer Boaz's question. What do I think about Nexstar banking on deregulation? I think it's going to happen. Perry Sook, the CEO, has made 3 or 4 trips to DC to talk. There is a woman who should get approved for, I think, an FCC chair spot, right? And when she gets approved, if and when, then I think the Republicans will have the majority. Yeah, and it's just, I think it makes sense because why are we capping companies that could have a greater impact on how we receive our news, right? Because Google, Facebook has penetration to 100% of households. So, I mean, it's the cat's out of the bag at this point. And I don't know. I mean, would you rather have a chatbot or a company from China giving you your local news as opposed to actual people that are in your town giving you local news? So it's going to happen. Nexstar is the biggest, the 800-pound gorilla in their space. And they've even said they're shoring up their balance sheet and they're stockpiling cash to hopefully make those acquisitions and grow bigger. Yeah, buy back stock. So I'm happy at them, man. CW is probably going to finally turn a profit in 2026. By the way, Nexstar owns News Nation. They own The Hill, which has a couple million YouTube subscribers. And on the CW, free. It's a free app. I don't know if you got any wrestling fans in your life, but WWE Next. I don't want to turn this into a ad for Nexstar, but yeah, it's CW. It's a lot more sports. And that's like Smallville and all that stuff. No, that went away, but they're doing well. The NASCAR Xfinity Series, just really good things. We'll cut it up there because I'll just drone on forever about Nexstar once you get me started. And again, that's when I could think it's, I'm wrong, but all right, I got to look this up for you, Matt. I know you're patiently waiting. Like, come on, get to it. Right after Rob's comment. He said, because it dovetails with my goal, he said, I don't invest in non-producing assets, but I also should probably diversify beyond equities. Gold seems like a solid option, but after its latest run up, I can't bring myself to do it. Yeah, man, I don't know where it's going to go. If you told me next year at this time, gold was at 4,000 or 1,000, I would be surprised by neither. So yeah, Sam, you want to look up? All right, Sam, I'll remember this. You got UNH. And yeah, Patel, they do own WGN TV. So fun fact, if anybody can get 7:20 a.m. WGN, the top of every hour, so if it's, coming up at 8 o'clock, you'll hear them say, they do a little ad and they'll say, you're listening to 720 WGN. They'll say, a Nexstar Media Group station. Like, yes, that means every ad I hear on 720 WGN is money coming to me in the form of dividends and share buybacks. Okay. I got to look up ADP for Matt and UNH for Sam. Before you guys stop it. You'll get me going on WGN, or not WGN, Nexstar. Sorry, I'm doing 5 things at once here. So Matt, all right, as usual, I'm going to go quick here, Matt. So, if you want to look at anything more in depth, pause the video. But yeah, super safe dividend safety score of 97. Very safe, very strong balance sheet. This is just a great company. So this will be quick. Let's see them on their valuation. Yeah, they increased during the last recession, negative 29%, but the S&P was negative 55% recession return. Dividend growth, very fast. Just solid dividend growth. Great company. Oh, that's right. And they are, ladies and gentlemen, a dividend king. Paying out $6.16 per share annually. And they're toward the higher end of the valuation that Simply Safe, gives. They expect the price to be 264 to 322, so they're in the reasonably valued. And hey, as Warren and Charlie would say, sometimes it's best to just pay a fair price for a wonderful business instead of looking for a wonderful business at a fair price or fair. Oh God, I screwed it up. Anyway, you get the gist of what I'm saying. All right, let's go quick through here. Free cash flow payout ratio, it was a little up there, but it's been dropping. That's beautiful to see. Yeah, I don't know how they're affected. Are they? Oh, dang it, it did it again. I'm sorry, Matt. Hold on. I don't know why it did that. Golly. So free cash flow per share looking to be just towering. I wonder why that is expected to go from $10.30 to $14.80 per share next year. That's what the analysts are projecting because I don't know if you guys know this, but nobody knows exactly over the next 12 months what this is going to be. So yeah, sales growth always positive. 410 million shares outstanding. Just, yeah, this is a solid business. When you just see total sales going up, shares outstanding down, stupidly high margins. Just a really good business. Net debt is low. Yeah, Matt, you know what? Probably not financial advice, and I have never dug deep into ADP, but just looking at the numbers, it looks just probably best to just start that position or wait till the market crashes. I don't know. We don't know what's going to happen. So, and then Sam, yeah, United Health, right? They've had issues. They're our health care provider. Dividend safety score of 99, very safe. Yeah, they look undervalued. So if you're a believer, but hey, reform is a risk, right? I know you're not here in the United States, Sam, but there's single payer talk. There's Medicare reform going on, with PBMs, the pharmacy benefit managers. So there's a lot of uncertainty regarding the managed healthcare space. And, again, we don't know how it's going to shake out. But if things do correct and go okay, then it could be a great time to buy United Health. But let's see a few more of their numbers. Yeah, they grow the dividend fast. 15 years dividend growth streak. They raised it 11% in June 24, so they'll a couple months here be coming up for another raise. But yeah, way undervalued. They predict expected price of 540 to 660, and they're currently at 488. But we'll see. That's, again, the market hates uncertainty. Remember, never forget the market is forward looking. So it usually bakes in expectations about the future. And when that future is uncertain, well, yeah, and that dividend yield. Sorry, no, stop moving the screen. 1.72, and its 5-year average is 1.42. So a little bit higher, but free cash flow payout ratios jumped up a bit, but it's still really low. Earnings per share go up, free cash flow per share could be at an all-time high in the next 12 months. So if that happens, people are going to come in and buy. So if the analysts are right, yeah, I think wasn't Kevin Burgess buying this? Sales growth, still 8%. Usually it's almost in double digits. 929 million shares outstanding. Total sales still going up and to the right. Margins, there you go. You can pause and look at these a little more, but yeah, their margins look okay. Operating margin a little low, but their debt is under control, and this might be from the interest rate hikes that their interest coverage ratio has come down a bit. So, without going further into that, I think it's without knowing the future. Yeah, exactly, Bubble, like that. We don't know the future. We don't know what's going to happen, but if things aren't as bad as the market thinks it might be, then it's probably a good time to buy. TKO, they're paying a dividend now, right? Let's I got a minute here. We'll peek here. Let's peep on real quick. We'll peep on TKO. So TKO owns the WWE and what else they own? UFC. So TKO Group Holdings, 1.9% dividend, 1.09% dividend. They don't have dividend growth in that, so all this, but yeah, UFC. They own UFC and the WWE, and they might, I think, be doing a deal for boxing or something, right, from ESPN. So they just started paying that dividend of 152 per share annually, but free cash flow payout ratio only 26%. Probably stuff that plays really well on streaming, right? The WWE, isn't WrestleMania going to be on Netflix? Free cash flow per share going back to 22, it's been kind of flat. But yeah, I think they might try and grow some. Sales growth 67%. That really good. But yeah, here's the dilution. Shares outstanding jumped a whole heck of a lot. But they probably don't have much debt, I would guess. Yeah, margins are 38% free cash flow margin. That means 38 cents out of every $1 in revenue coming in is making its way to free cash flow. And with free cash flow, right, you can pay a dividend, you can buy back shares, buy back stock, you can merge, you can do acquisitions, you can reinvest into the business, carried as cash on the balance sheet, I believe. Yeah, net debt really low. So, isn't this funny? Hold on, look at this real quick. Watch this. So, oh, it wasn't right. It wasn't commensurate. So that the shares outstanding really popped. I think they IPO'd, and I don't remember when they IPO'd, but anyway, they had an influx of money from shares, and they looks like they paid down debt. And the interest coverage ratio, though, a little bit worried about that. That's if you guys don't know, the ICR, the interest coverage ratio, all that this tells us is how many dollars of operating income does a company have to cover every $1 of interest on the debt. So I believe operating income is, right, correct me if I'm wrong, the same as EBIT, earnings before interest and taxes. So they currently have $1.14 of operating income to cover every $1 of interest on the debt. So that we like to see a little higher, at least 5, give you some wiggle room. So, all right, I gotta get caught up here, dude. You guys are great. I love it. Oh, somebody asked here, what are you buying during this down market? Are you buying heavy? Yeah, I shared. I'm buying more VTI. What I've shared with you guys is that our investment net worth, my wife's Roth, my 401k, what I share in the 3 portfolios on the channel at Schwab, not including our kids' 529, any other investments like that, custodial accounts, just our investment net worth. I want to be 85% funds. So like VTI, SCHD, I have DFUSX, which is the mutual fund version of the S&P 500 from Dimensional Funds. I have FSMDX, it's a Fidelity mid-cap fund that's in my 401k. Things like Global X, the MLPX, the Global X Energy and MLP and Energy Infrastructure ETF. I want funds to make up 85% of our investment net worth and individual stocks to be 15% because I don't trust myself that I'm a good stock picker, but I enjoy it. I enjoy learning it and trying to get better at it. But just in case, if I'm wrong, if I'm really wrong, 15% would suck, but it's not going to blow up our trajectory terribly. But I'm trying to buy, I'm not YOLOing into penny stocks or GameStop options or whatever. So, yeah, I will be buying as much as I can. I'm always buying, right? Just keep buying. Jim's all in on hummus futures. I don't like hummus. That's chickpeas, right? It's okay. My wife likes hummus. And then, President and CEO of WWE. Yeah, well, hey. You're welcome, Matt, and Sam about ADP and that. Yeah, TKO, 2 strong buys and 1 hold. It's an interesting one, and that would be a great stock for kids, right? Trying to get young men interested. If you got a UFC fan or a WWE fan, you can buy them in a custodial account, shares of TKO. And you're like, dude, like you are now an owner. You literally own the WWE and the UFC. Well, I own it too because it's, VTI. I own everything. So it's, but it's if you buy one share, you got a share. But I have I don't know. It's you need one of those high-powered microscopes to see the amount of TKO that I own through VTI, one share. Oh, that's right. Yeah. So WWE and TKO, I think, merged, and then WWE shareholders got shares of TKO, right? Boaz, thank you. I should be asking this. I just get so excited talking to all of you guys. Yeah. So, well, we're toward the. That's it. That's it. The PBR, professional bull riders. Yeah. These divs, thanks. Yeah, I'll drink to that. I'd like to think I'm a smart stock picker and this is all going to do great, but I just, and then I can sleep well at night. Put it that way. I can sleep well at night with my, so Burt's Beeswax I found in my hoodie. By the way, Burt's Beeswax, ticker CLX. Clorox owns Burt's Beeswax, Kingsford Charcoal. Clorox also owns Hidden Valley Ranch. Weird, I know. You wouldn't think Clorox. I'm pretty sure, though, that they're not manufacturing the bleach and the Hidden Valley Ranch in the same facility. I'm sure it's like, it's states miles apart. But anyway, whoever did that thumbs up thing, I thank you for that. Yeah, ETF Foundation. It's just against my own. Everybody thinks they're a great stock picker, and I know I try to show as well as I can, but it's kind of silly when I'll be like, you guys know I love Nexstar, but if I would have just bought VTI, I would be much further ahead on a total return basis. But hey, but I enjoy it, and I haven't lost any money yet with Nexstar at least. So good. Defense Dad, you like ADP below 290. So you know what, Alan? look at Alan here. He's like it's like vaudeville. He's off stage with the big hook, starting to pull me off. So yeah, that's a good time, my friend Alan. So thanks for reminding us. And dude, I love this. I hope you guys liked it. Leave a thumbs up, whatever. We'll do it again next week and bring more questions, more stocks to look up. I enjoy that. And hey, let's get it this week. We don't know what's going to happen. So if the market drops, don't freak out. Just remember that it's less expensive today than it was yesterday. So fantastic. I love it. You guys are beautiful. Thank you. And I will talk to you next week.